Hi friends, this is Kishore. Welcome back to my channel. Today I'd like to cover market index analysis, economic data, earnings data, bond auction report, senior loan officer opinion survey, and rate cut projection by globally. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. CNN Fear and Greed Index, it came 78, extreme greed level. So last couple of weeks it's the greed and extreme greed levels. And this is weekly heat map. NVDA got results and it is up more than 8% this week. And this weekly heat map for the ETFs, most of them are up. China bounced, so it up more than 5%, FXI and a few other ETFs. So we need the follow through week bounce, then China stocks might be bottomed out. And this weekly sector performance, all sectors are green. Risk on, risk off, defensive, non-defensive, all sectors are green. Energy is green, but it's just less than 0.5%. Materials is up, very good one. Consumer staples is up more than 2%, and the technology is up, and all sectors are up. And this is when December, January, February. If 3 months are green SPY, then next 12 months how it is going to be. So next 12 months, based on the previous history, it is green. It is bullish, very bullish. I would like to talk about this chart again. I shared this chart in my last video. If you see here, from S&P 500 3000 to the 4000 level, it went up really fast. One of the main reasons is monetary policy. When monetary policy is easy and money is pumping into the economy, market rises easily. If monetary policy is tight or lending standards are tight, then it stops the market to go up. And if you, this is a semi Fed watch tool. If you see here, there is a rate cut, 52% rate cut chance in the June, not in even in the May it's just like 25%. So the rate cut is 25 basis point rate cut is possible in the month of June. Let's see how it is going to be, because we know that the previous week we got the inflation data more than the expected. So next couple of inflation reports, if they come better than the expected, then there is a high chance for the rate cut in the June. Otherwise, again, we may go to the July or the September. And this is the other central bank's rate cuts information. European Central Bank, they projected the rate cut in the month of March, and the Bank of Canada, they said they're going to rate cut by June, and also Bank of England, they're planning to rate cut by June. So if this happens, then it is good for the equity market. If it is not happened by Central Bank of Europe or Bank of Canada and Bank of England, then there is a chance the market may not rally as we expected. And this is economic data. US leading economic indicator came 0.4% better than the expected one. This is one of the important indicator we need to follow. This tells like soft landing, no landing, or hard landing kind of thing. And initial job claims, it came better than the expected. They expected 216, but it came 201,000 only. And S&P Flash US Service PMI, it did not came as expected, but it's not bad. It is above 50. That is what important. And S&P Flash US Manufacturing PMI, it is also came better than the expected one. Existing home sales, this is one of the main thing we need to look into it. Previously the existing home sales data is bad, but this time it came better than the expected one. And this is 20-year bond action data. So the 20-year bond action went on February 21. It went very ugly, means the demand for the 20-year bonds are very low. So finally they are able to make it, but it with the higher interest rates. And this is TLT chart. So right now it is at the 93.87, which is at the if I put anchor VWAP on the low 82.45, it is at the right above, just right above the anchor VWAP. If it breaks that, then again it can come back to the 91.57 or 89. But looks like RSA is going up. So if it bounces here, then it again we can go up to the 96 levels. And this is senior loan officer opinion survey on bank lending practices. This data released on the January. So I would like to share this one, because this is one of the important one, how the monetary policy is in the market. So if you see here, the reported tighter standards and weaker demand for commercial and industrial loans to firms of all sizes for the fourth quarter. So in the 2023 fourth quarter, the demand is very weak on the, and also tight, the lending standards are very tight. Furthermore, banks reported tighter standards and weaker demand for all commercial real estate loan categories. So even for the commercial real estate, the demand is very low, very weak, and the tight lending standards are very tight. For loans to households, banks and balance reported that lending standards tightened across all categories of residential real estate loans other than government residential mortgages. So even for the residential real estate also, the lending standards are very tight. Meanwhile, demand weakened for all RRE loan categories. Moreover, for credit card, auto, and other consumer loan standards reportedly tightened and demand weakened on balance. not just real estate or the commercial or industrial loans, even in the credit card and auto loans, consumer loans also, the lending standards are very tight and the weaker demand is there. And for the and also banks and balance report expecting lending standards to remain basically unchanged for commercial and industrial and RRE loans, but to tighten further for commercial real estate, credit card, and auto loans. So even and they're expecting that lending standards going to be tight for the commercial real estate, credit card, and auto loans, and unchanged for the C&I and RRE loans. So this tells the monetary policy is very tight right now. And this is next week economics data. So new home sales, one of the important one, S&P Case-Shiller Home Price Index, and consumer confidence. Consumer confidence is one of the important fund to know the how the recession comes or not. And GDP first version, initial jobless claims, PCE. Again, this is one of the important for the inflation, where Fed looks for the rate cuts or rate pass. And this is PCE, core PCE, pending home sales on Thursday, and on Friday we can see S&P US manufacturing PMI, ISM manufacturing, construction spending, consumer sentiment. So, and these three, like manufacturing and consumer construction spending, these three are important for whether the economy is contracting or expanding. And this is next week earnings. So if you see here, the lows and lending trade both are related to the real estate. So as real estate data is projecting the lack of home sales and very less home sales and very less demand. So I'm a little bit concerned how the data going to be, how the guidance going to be. Macy's, this is one of the important one because they last quarter the consumer spending is huge. So I'm expecting the Macy's data will come good. And Mara minus, as I'm bullish on the Bitcoin crypto side. Let's see how the guidance going to be for the Mara. Snowflake again on the cloud side, I'm bullish. So let's see how it is going. And they are also CRM. Okta, we know that like last week Pan Alto, they posted bad guidance, and the stock was tumbled more than 20%. So this week, Okta and also Jetscaler is coming. So I would like to see how they're going to be. CLH, this last year it was added into the index. So I'm very curious how it is going to be. This is one of my favorite stock to look into it. And this is number of percentage of stocks above 20-day moving average in the S&P. So right now it's at 71.37. In general I'll take this 86 as the selling point and 14 is the buying point. But right now, last couple of weeks, it is dancing between the 30 and the 70. Let's see if it goes to the 86. That is good for me. It's a selling point. Or if it comes back to the 14, that's a buying point. And this is S&P weekly chart. You can clearly see that there is a negative divergence is developing in the CCI, and RSI is pointing higher. And the last 15 weeks, only 2 weeks are down, and remaining 13 weeks is it's up. And this week the candle is good, very good. Volume is above average, but not great volume. But the candle is really good. But it rejected the Fibonacci level of 2510 at 10, because one of the main reasons is NVDA results came good and market is pumped up, and market rally like anything. And this is the SPY daily chart. So if you see here, this is the gap up, very big gap up, bounce at the 20-day moving average, and as Friday it closed red. But if it closes above again 510, then we may see the new highs again. Like 523 is my next target of reversal. But let's see whether it's going to be break 510 or not, because I see some negative divergence in the RSI. And this is the ratio of equal weighted RSP equal weighted of SPY and the SPY, because we know that SPY is 29% is by max 7 stocks. So whether it is the breadth is increasing or not, I'll take this ratio. So if you see here, the ratio right now is at the April 2020 lows. So which means only handful of stocks are rising in the SPY, not all stocks are participating, because the equal weighted is going down. So this is a very critical point. If it bounces here, then that is good for the SPY. Otherwise, it is not good for the SPY. And this is like how the Magnificent Seven performed in last 5 years: 2019, 2020, 21. And if you see at 2020, it is the year where all of them went red, like negative. From that, they are all bounced. Especially Nvidia, 2023, it went up 238% again. This is from February 13th. So Nvidia is almost up again 60% here. And this NVDA chart, it's a weekly chart. So right now at 788 level, which is if I take this Fibonacci level, it's just about the 2.618 level. So if it continues support at 735, then 9 cent for the next target. And if you see our last couple of weeks, the volume is huge. There is no sign of weakness in the volume side, and also in the candles, straight green candles last few weeks, like almost 6 7 candles is green candles. So if there is no sign of reversal here in the candle, and also the no sign of reversals in the volume. In the RSI is also extremely overbought, like 86%, 86.51. Only the CCI is going down. This is one negative divergence I see here, but we need some kind of candle or volume shows some kind of strong reversal signs. And sMCI, this is also on the weekly chart, it went up like anything, 1081. And the volume, if you see the volume is going crazy. And RSI is at 98, extremely overbought region. CSI is going down. This is one negative divergence I see here right now. But if it stays above 774, then it can go again 892 levels. But right now, huge wicks at the top. So this tells like a huge selling at this price levels. And this QQQ weekly chart, if you see here right now, it is at 436 levels. Last 3 weeks, it is going on sideways. So this week is the outside candle, means outside bar, means last 2 weeks, last week or before week, the candles are overlapped this week. So and the volume is just above average volume. Let's see whether this range bond will break the downside or the upside. If it breaks the downside, then my support is at 411. Otherwise, if it goes up, then 454 is the my next target. And this is QQ daily chart. Again, I see the negative divergence in the RSI and huge gap up because of the NVDA. The all stocks are up, and this is a huge gap up here. This gap acts as a good support for QQQ for the next couple of days if it don't fill that gap. And this is IWM. It's a weekly chart. If I give an anchored VWAP from all-time lows, so right now it is at the 180 level, and if I put anchored VWAP at the highs, it is at 183 level. So 180 and 183 levels, this acts a very good support for the IWM. And last couple of weeks, it is going on the sideways, like it happened in the 2022. So the same thing is happening here. It need to be break here, then only IWM can go up. Otherwise, again, it can come back and touch this 180 levels sooner or later. And this is natural gas. In my last video, I mentioned this is going to be bottomed sooner or later. So it bottomed at 1.5 level and bounced it at 1.5 level. And last 3 days, it is above 1.68 levels. So but we need some confirmation, follow through week. If it goes again above 1.68 level, then it is good. Otherwise, we need to little bit careful on this one. And this boil, it is bounced right exactly at my 1.618 level, 13.54. It went few days on sideways here, and then huge gap up, and then again rejected here. So we need some confirmation. So it need to be closed above 16.95 level. Then at least the first level of distance is broken, and we may think it is bottomed out. And the market summary is market is rising with handful of stocks. We see that very like Max 7 arriving, rising based on that RSP SPY ratio. And also we see some negative divergence in the negative RSA, negative divergence in the daily and weekly charts in the SPY and the QQQ. So it tells some kind of chance, there is a chance of market can come down. IWM is struggling to break the range bond. We see that there is a range between the 200 and 180 levels, 190 levels. So it's going on the sideways, but it needs to be break that level, then only it can go to the next levels. Otherwise, again, it can come back to the 180 levels. Market is rising with the anticipation of rate cuts in June. So initially the rate cuts they planned is in March, but it got postponed because of the high inflation worse than the expected inflation rate in the previous week. So natural gas is bounced right at the support level, but we need follow through week. So as I showed in the chart, so we need that 1.414 level break and go stay above $17, then we can think about the boil. Otherwise, we need to be a little bit cautious at this level. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please share this content if any of you can looking similar kind of content. Please hit the bell icon so that you will get notification when I upload a new video. Thanks so much. Bye bye.